You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts, Uncle Mike TOSAW from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster GIOVINAZZI from OptionPit.com. Most options trading platforms are commission-free, and there are some that don't charge per-contract fees. Public.com goes a step further. When you trade options on Public, there are no commissions, no per-contract fees, and you get a rebate of up to 18 cents per contract traded. That means it costs less than $0 per transaction. In other words, instead of paying to place options trades, you literally earn money, and that money can add up fast. If you trade 1,000 option contracts on Public, you'll earn up to $180 in rebates. 10,000 contracts? Up to almost $1,200. It's pretty obvious why NerdWallet recently gave options trading on Public 5 out of 5 stars. Because Public really stands out for the cost of its options trades. Their words, not ours. If you want to start paying less than $0 to trade options, check out Public.com and get a rebate of up to 18 cents per contract traded. Paid for by Public Investing. Options not suitable for all investors and carry significant risk. Full disclosures in podcast description. U.S. members only. And now, get ready to hit the Option Block.
All right, everybody. That music means we are back once again. It is Monday. It is time to commence operations here on the network for the week. We like to do that with everyone's favorite bi-weekly options extravaganza known around the globe as the Option Block. My name, of course, Mark Longo from the THE OptionsInsider.com, as well as from the network upon which all you folks are going to town on these days. Keep going to town. There's more town to be found there, so keep downloading, streaming till your heart's content. We're doing some updates on the old YouTube side. Some of you have been writing in saying, oh, there's interesting stuff on the YouTube. The older stuff's coming through. Yeah, Google Podcasts went away. It all has to go over to YouTube Music, so you have to make some updates behind the scenes. And I think that might be porting over some old shows there as well. So if you see a show from 2020 pop onto the front of YouTube, that's why. But we are working diligently behind the scenes to get all that sorted out. I don't know why Google can't just have a Google podcast. Why can't they have nice things? They have to just cancel and kill it all. But you know what? We do it for you folks. We keep migrating and merging so you folks can find it. Just about every platform under the sun out there. On all those platforms, whichever one you're listening to on, if you like it, throw a like, a star, a comment, a rating, review. All that stuff does help. Of course, if you like what the sponsors have to offer, or if you like the fact that they're just coming to play on the network, remember, that little intro there is the reason why these shows are free and have been free for 17 plus years. So if you like what you hear, you like the fact that these folks that are supporting the network, get out there, let them know. That goes a long way towards keeping these shows free for you folks out there. Now, if you want even more content beyond that, of course, you want to go above and beyond, you want to join us for pro Q&As, extra heavy lifting that we have to do for those. Those are available for those folks who want them over there. TheOptionsInsider.com/pro. Options oddities at the end of the week. Giveaways, man, it's 22nd of April. We're recording this. Already almost time to give away the April Pro Trading Crate. You want to win that. Trust me. Get your name in the hat. theoptionsinsider.com/pro. As we go around the horn, see who's joining us today, I'm pleased to be joined once again on the Monday episode by the uncleist of Mike's, Mr. Uncle Mike TOSAW from St. Charles Wealth Management, as well as by the rockingest of lobsters, Mr. Andrew GIOVINAZZI from OptionPit.com. I introduce them now, listeners, because they are busy getting their hands on the buzzers, because it is time to commence our broadcast week with a little bit of fun. Wake everybody up, shake off the cobwebs from the weekend with a little bit of 80s trivia. There we go. All right, listeners, going to take you on a little bit of a journey today. Where we start is not necessarily where we end. All right, gentlemen, get your hands on your buzzers. Oh, they're both typing already. I don't know. Are they both want to buzz in? Are they going to pull the Uncle Mike? Buzz before the question is asked? I'll give you a chance if you want to buzz first. Okay, no one's insane. Okay, here we go. All right. In 1998, everyone knows the MCU. Everyone knows Samuel Jackson as Nick Fury now, kind of an iconic portrayal. But in 1998, another actor played Nick Fury in a terrible movie by all regards, but also just appearance-wise, a much more comic book accurate appearance for the character there. You might be saying 1998. Well, what does that have to do with the 80s trivia? Well, like I said, where we start is not where we end, because the actor who portrayed Nick Fury in that terrible film is most famous for kicking off his career in the 80s on a TV show starring a talking car. I need the name of the show, and I need the name of the actor. All right, Uncle Mike. Buzzing in. Oh, he beat you, Rock Lobster, by mere milliseconds. Got to be fast on the trigger finger. Mr. Uncle Mike, what is the name of the show, and what is the name of the actor?
Knight Rider, David Hasselhoff.
Yes, a full point for Uncle Mike TOSAW. And, I'm feeling generous. By the way, the coming into today, the score was 5-3, so the Rock Lobster was closing the gap. It has now gone back the other way. But you know what? We'll make it a 1.5 point game this week, so everyone can win this, not just Andrew. Everyone can win this.
I couldn't think of David Hasselhoff's name for the life of me.
All right.
It's killing me.
Here's a bonus half-point question. Whoever's faster. What was the name of the car?
Kit.
I buzzed first and spoke first.
You did buzz first into the thing.
No way.
You did type buzz. I see it here. Uncle Mike, whoa, pulling away. Just as Andrew was starting to close the gap. There we go. I'll make the notes here for our producer. And don't hassle the Hoff, ladies and gentlemen. There we go. A 1.5 point swing for Uncle Mike, just as it was starting to get
Baywatch, but I could not remember his dang name.
I don't know about you, but back when I watched Baywatch back in the day, I was not watching it for David Hasselhoff.
Yeah,
well, granted. All right, I got it. However, I'm like, I just couldn't think of his name.
But Baywatch, not really
yes,
an 80s.
I mean, that was probably part of the problem. There's all kinds of cloudiness going on.
Not really an 80s show, Baywatch. I think more of the, mid-90s into the 2000s kind of range, but intriguing for different reasons than Knight Rider. But yes, Hasselhoff, Knight Rider, and bonus point Kit. Did you get those, listeners? As we keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block, the portion of the show where we break down what the heck is trading. Yeah, if you want to, I've never actually seen it. I've only seen the pictures of his portrayal. Terrible film, obviously. But people forget. David Hasselhoff, the first to portray Nick Fury on the big screen. A full decade or so before the launch of the MCU proper. So, yes, a little bit of history to put in your cap, listeners. Are we seeing history out there in the broad markets out there today? I guess it depends how you define history. If you define history as being back north of that magical, mythical, seminal 5,000 level in the S&P 500, then yes, we are witnessing history today as we speak. S&P up 0.75% right now, a little bit north of the 5,000 handle, 5,004 or so to be precise, up almost 40 handles on the day. So a nice little pop here for the old S&P. Of course, we broke through it last week on Friday. A lot of people thinking maybe this was beginning of a warm turning moment. Perhaps not. We shall see. Maybe today is just the head fake. You never know with these markets. The Dow up about 0.2%, and the NASDAQ up about 0.85% out there. And let's see how our old friends small caps are going out there. They're up a full almost 1.05%. So small caps feeling the oats. All the markets have the bit in their teeth today, which means our old friend VIX feeling a little bit of weight, feeling a little bit of downside today at about a 1730 as we're kicking off the show. Down about half a point from where we were on Thursday. VBIX 93, so still frothy. I mean, we are obviously still moving. It's hard for vol to come in too much when we are moving nearly a full percent in the S&P. We're down about 2 points from where we were on the Thursday show. VXX 1440, down about 0.6 of a point. UVXY 36.5, down almost a full point there. SVIX 37.4, up 0.4, and UVIX 10.4, down about 0.6 of a point. UVIX coming in hard. I was just looking at some, I think it was 11, 10 put spreads or things like that on Friday going into oddities. Never got a chance to get any off, and we're already threatening the 10 handle, 1040 right now. So UVIX, get out of the way sometimes, listeners. As we go around the horn, let's start with our 1.5 point victor today, Mr. Uncle Mike. Mr. Uncle Mike, if you have any enduring memories of one Knight Rider, have at it. And then B, what's catching your eye in a very Uncle Mike type of day in the markets?
I was a big Knight Rider fan as a kid in grade school. I actually sent in, you got to get what they called your kit. It was like the blueprints and all the documents that showed how kit was made and how it was built. And I thought that was the coolest thing ever. I sent in for my free kit. Did you ever have a kit, Mark?
I never did, but they don't do much of those mail-aways anymore. Those were kind of cool. Like the G.I. Joe fridge figure was a mail-away, I believe. You couldn't just buy him on shelves. So those were cool and very, very expensive items now in the aftermarket.
No doubt. I wish I still had my kit, but that's okay. I still have my Brutus the Barber Beefcake wrestling action figure, so that's a good thing anyway. But no, I love Knight Rider. I thought it was the coolest show ever. I thought that it was neat how the car would go into the trailer all the time, or the semi-truck trailer, and you don't mess with Michael Knight. My gosh, that was a neat show as a kid. Very fond memories, to say the least. Almost as fond as this market today. I don't know if I'd read too much into the pullback we're having or the rally that we're having today, just because of the fact that we're in a bigger moving market. And when you have big rallies, you're going to get big pullbacks. And we've had a pretty decent sized pullback these last couple of weeks. And so that's fine. I mean, I know there's the whole thing going on in Israel. There's the AI not going to be able to cut it like we thought they were. Is the Fed going to not cut interest rates or whatever? We do have that news, but ultimately what caused the pullback, in my opinion, is just we've had such a big rally. So those are some of the things with which I'm looking at along those lines. Today, obviously, markets are looking pretty good. A couple things that are sticking out to me. We got JP Morgan, Chase up over 1% on the day. A couple other names that I'm following. We have NVIDIA. That's up over 3% on the day. So that's obviously a bullish thing for the market. Tesla. Looking forward to seeing what Elon has to say about earnings there. That's actually down 3% on the day. And just a variety of other things that are happening to where it's not like one specific theme of where, oh, this is where the bulls are, this is where the bears are, because in the tech sector, of course, you have the big move in NVIDIA, but then on the flip side, you also have some things that aren't really doing so hot. Apple's only up 0.5% on the day, which that's nothing for Apple. I mean, come on, market's up this much. Apple should at least be up more than that, but that's just kind of the way it goes with things. And then a couple other things. Netflix is down on the day today. So we have a kind of a mixed market with some of the names with which we typically look at. The sectors overall themselves, financials are up over 1% on the day. That is the leading sector for the day today. But technology is up 0.5%. But once again, you have some up, some down. So it's very much a mixed market on the day. The things that aren't looking so pretty right now is the shiny stuff isn't so shiny today. Both gold and silver are down significantly on the day. Silver down roughly 5%, gold down around 2%. So we also have that. Bonds are flat on the day, so there's not really a lot of movement in the bond space. So a lot of moving parts and a lot of different things happening as of right now, which makes for an interesting market.
That it does. Listeners, fun fact, not only did Uncle Mike send away for the Kit Kit, he's such a big fan. If you see pictures of him from the 80s, listeners, he had the Michael Knight perm. He had the full look going. A little bit of frilly curls. He looked pretty good. So Uncle Mike, you got to put one of those pictures out on your Twitter page. I think the folks would like to see that. What do you think?
I have very straight hair. I've never had curls in my life.
Except for that time you sent away for the Michael Knight hair kit. And then he had a little leather jacket. Yeah, he was very much into the Hasselhoff oeuvre, shall we say, there in the 80s as we keep on rolling. Mr. Rock Lobster, did you too send away for the Kit from Knight Rider? And then B, what's catching your eye in a Uncle Mike type of day in the markets?
Yeah, I did not send away for anything that I can remember. You think about nowadays, like, kids are just looking on their phone at everything. I'm seeing like kids that are 5 or 6 years old having a phone. Why do you need to send away for anything? You just get it on your phone. So I don't know. I don't know if that's the best thing, but that's a digression. As far as the markets go today, I think we want to see some good earnings. I think realistically, they've pretty much dashed all the rate hopes, I think, in the short term. I'm not sure why gold is doing what it's doing, maybe dollar related. I haven't looked. But VIX is down from 19, basically 19 on Friday to 17 today. The worst Middle East fears were not realized, at least for right now, which is good. And I guess they're going to throw more money at Ukraine and Israel, according to the House vote this week. So apparently the market, even though it's inflationary, sure does love a good money chucking. So
is that the technical term? A money chucking? It's a good money chucking. Yeah,
I like chucking money at stuff. I don't like. Everybody says the uniparty, and I'm like, no, and now I'm like, yeah. It's just one bunch of guys and ladies that get together and just spend a lot of money we don't have. I think that's kind of what it's become. But besides that, I think the market wants good earnings. I think we've had, like, Verizon had a decent number this morning, but then they sold the stock off. I think we need to see some decent earnings numbers this week in order for it to be a Mike TOSAW kind of market. So that's what I'm looking for. We got big Microsoft coming. We have more PCE, all these deflators, whatever, all the stuff that nobody gave a dang about when interest rate and spending policy had some sort of coherence and somewhat reality based as opposed to what we have now. So now we have to look at all these dumb numbers like they're supposed to mean something. And it's mostly just a reflection of really poor fiscal policy. But that doesn't mean companies can't make money with higher interest rates. So I think folks want to see that now. They want to see better earnings from companies. And if they do, I think they'll kind of get back on the train again. But I think that's kind of what we're looking for this week. So we have, Thursday the 25th is a big day. Google, Intel, Microsoft. That's going to be a big deal. Lam Research, again, this is going to, on Wednesday, this is going to chips. It's like a lot of this stuff, Tesla is going to report after the market closes today. That also could be another big one. They like the GE earnings. So I think there's plenty of reasons to be positive. Is companies are kind of beating earnings. That's a good thing. And all of a sudden vol's down here. And what I will remark is we lost essentially 5% from the peak, right? We were 525 SPX Now we're 5,000. And the realized vol and 10-day realized vol over this stretch where we lost 5% of the market value of SPX is 1073 is the 10-day volatility. 1073. Now, I know you and Mike, we both think usually when the market sells off, there's some volatility, but not this time. So, I mean, VIX did move from 15 to 19. So definitely up. But there is not a lot of what I would call guts and acceleration on the downside. And that's ultimately I agree with Mike. They didn't get out and sell a ton. They took out some of the big chips like AMD, from 225, it's now 150 again. NVIDIA, they knocked $250 off. So some of the nosebleed stuff, they took a quick 25 to 30 to 40 to 50% off, bang. And I think that led to some other broad selling, but everybody looks around and the dust settles. It was a relatively, considering we're up huge in the last 6 months, the 5% is not that big a deal. So, it wouldn't surprise me if we got back up to just rallying again. It wouldn't surprise me at all. Now that also they've taken a lot of heat out of the stuff that was flying. So good earnings, I think, will go a long way this week.
It is a big earnings week. If you're sick of all this macro, who's going to do what next kind of stuff, you want to sink your teeth into some actual, tangible micro numbers, then this is probably the week for you. We'll get to all that fun in a second. First, let's go around the horn and see what's lighting up the tape out there in the options market today. Is it a banger day? The answer, again, is kinda depends on where you look. If you start in VIX, as we like to do these days, the answer is yes, pretty impressive. 506,000, so a little bit north of 500,000 already on the tape, listeners. The ADV right around 900K, 899 right now, so closing in on 1 million contracts a day. That is impressive. Things are popping off in the market when VIX is threatening 1 million contracts a day in the ADV land. The game is afoot, as they say. What's lighting it up in VIX today? Looks like you got 44,000 of the May 28s, followed by about 38,000 of the May 14 puts. Not sure if that's a collar or what exactly is going up out there, listeners. Looks like they all just went up at different times out there. So not a collar, but intriguing nonetheless. Which of those you like better, listeners? You like, if you had to buy one, May 14 puts or the May 28 calls? Which way you going? I have a feeling I know which way you go, but it might be a fun question of the week if we didn't already have a fun question of the week out there. SPY, 5.1 million, which is a banger day. By now, listeners. If SPY's north of 4.3, it's a pretty action-packed day. 5.1, nothing to sneeze at. The ADV, 8.04 million out there, listeners. S, same deal, 1.75 million. That's pretty much right around where we expect it to be this time of the show, so not quite as robust as SPY. The ADV, 3.15 million out there. Small caps, IWM, 671 on the tape. So impressive. Almost halfway to its ADV, which has continued to soar. It is now 1.4 million contracts a day. That's a heck of a lot of paper for small caps, but hey, they clearly are putting it up these days. And the Qs, man, the Qs already on fire. 2.5 million already. If you know the Qs, this time of the show, they're usually hanging out between 2 to 2.2 million. 2.5 million is actually a fairly impressive number right now, but we said NASDAQ on fire. It's actually up to 2.6. I just re-racked it. So they are on the rampage, on their way to their also higher ADV now, which is almost 4 million contracts a day, 3.9 million contracts a day. So NASDAQ just printing contracts out there, printing paper out there. Is the same thing going on in the single name land? Can we say the same thing about all the single name equity options you folks like to sling out there? Is it a banger day for single names? The answer is no. Sorry to tease you there. That's kind of my job. But only cost you 172,000 contracts to break into the top 10 today. So that's kind of nothing. Kind of a snooze fest. Again, a lot of people keeping their powder dry ahead of some of the big names popping off this week. We'll get to who's popping off in a little bit. Number 10 gets you all the way to Bank of America. It's kind of a quiet, sleepy day when Bank of America's breaking into our top 10 here with 172,000 186,000 contracts. Again, Bank of America today up 3/4 of a buck, trading about 37 3/4. So decent day for Bank of America, decent volume day, enough to make the top 10 today. Number 9, haven't talked about this one in a little while. Our old pal AMC, number 9, 176,000, up about 15 cents, trading $3.30 right now. Man, what a 52-week journey this one's been on. High of 62.30, low of 2.30. A literal $60 range. Impressive stuff out there for good old AMC. Of course, these numbers, take them with a grain of salt. They had all those issues. Oh, with the stock, there was ape, there was the conversion, all kinds of fun stuff out there. But nonetheless, AMC making it into the number 9 spot today, 176,000 contracts. Are you still an ape? You still slinging that stuff out there, listeners? Number 8, Palantir. I haven't talked about them in a little bit, but they're back in the top 10 today, 180,000 contracts. They were kind of coming for them over the better part of the last week. They had sold off from about almost $22 down to almost 20 on Friday, and now they're rallying a little bit like everything else out there today, up to about 20 3/4 today. That's good for 180,000 contracts. And the number 8 spot, number 7, Riot Platforms. Now it used to be Riot Blockchain. Now they're Riot Platforms out there. Of course, with the halving in the offing out there, which we'll get to more on the crypto rundown a little bit later today. Special guest, Uncle Mike. Just kidding. He'll never be caught dead on that program. 10 3/4 is where Riot is hanging out right now, up about $1.61 or nearly 18%. I do have a fun guest, though, so stay tuned for the crypto rundown a little bit later today. Riot, number 7, 187,000 contracts. Number 6, keeping it in crypto, it's our old friend Mara. Mara just whipsawing all over the place. If you're bored with equity options in terms of, I don't want to trade SPY and SPX and VIX is kind of anemic, who cares? Allow me to present Marathon. It's whipping all over the place. It's got volume. It's got ADV. If you want something to sink your teeth into, Marathon's moving. It's got volume and volatility, the two things that an options trader needs. 1680 right now, up about 30 cents or nearly 2% today. This thing's moved from almost 15 to almost 30 multiple times over the last few months, and now at the lower end of that range. Good for number 6, 211,000 contracts today. Number 5, the Amazonians, 176.40, up about $1.80 or 1% today. So a nice little pop for them out there. They've had a 52-week range of $101 on the downside and $189 on the upside. So intriguing run for them. Amazon, the newest member of the Dow family. Number 4, keeping it in A, tech names. It's AMD, 148. Pretty much even, up about $1.40, nearly a full percent for them today. Number 4, 347,000 contracts. Numero 3, it is the fruit company, 384, up a whopping 99 cents, trading 165.99. So they can rally a little bit. By the way, they have finally moved away from their 52-week low, which they hit recently, of 162.80. So Apple kind of struggling here on the year. They're off nearly 11% or nearly 20 handles, when the rest of the market has obviously, outside the last week or so, really look pretty good. Their high actually was obviously almost $200 not too long ago, so obviously a decent way away from that. But number 3 today, 384, kind of light paper for them out there today as well. Number 2, it's the fruit company getting back some of their luster. They sold off 10%, I believe, on Friday, so they really came for the NVIDIA on Friday, getting back about 4% of that today, or about 33 handles, trading $7.95 right now, good for 1.07 million. That means you know it, you love it in the catbird seat. It is Tesla, 1.36 million, off about $4.50 today, trading 142.5. They hit their 52-week low this morning of 138.80, so they have bounced off that. So I suppose if you're looking for a note of optimism in Tesla land, there you go. Man, they have come for this name. It was $300 almost, 52-week high. Now 138.80, so cut more than in half out there. Wow. Again, they keep slashing prices out there. Intriguing. We'll find out more because it is, of course, earnings season this week. A lot of big names popping off out there. Today, we got Verizon, as the Rock Lobster already alluded to. Tomorrow, we've got GM, we got UPS, we got PepsiCo. Used to be down the street. I'm not sure. I think they've moved since then. I don't think they're down the street anymore. Everyone's moving from across the street. We were in the nexus of all these HQs. BA, literally across the street from us. They're kind of moving away now, too. JetBlue on Tuesday. Visa, Mattel, you want some Barbie and toy info? That's popping off tomorrow. And then, of course, the big dog, Tesla, tomorrow out there. Can they say something that's going to stem this blood loss out there? I don't know. This whole marketplace seems to be hemorrhaging on the EV front right now. Tesla, obviously, kind of the bellwether, the vanguard of that. So they keep slashing prices and slashing jobs. Doesn't bode well, but we shall see. We shall see. Maybe they can say something tomorrow after the bell that's going to turn things around. Wednesday, again, our friends formerly across the street, Boeing, AT&T, Meta, IBM, Ford, and Chipotle. Used to be the stealth Apple, not so stealthy anymore. Chipotle, off to the races. Thursday, we got American Airlines, Southwest, good old Softy, and Alphabet, and Intel, and Snap, and Roku. Roku, remember, not too long ago, they were a perennial top 10er. They have since fallen off, but maybe looking back on the radar on Thursday. Friday, ExxonMobil and Chevron out there. If you're looking for some names that are popping off this week, we had Verizon before the bell today. They were at 39 3/4 when we last ran this report on them. They are pricing in, or they were at the time, I should say, $1.50. In the past, they've moved to $1.32, and they're off almost 4% right now, 3.6% out there right now, which actually is about in line with percentage-wise, is about in line with what they're pricing in. That works out to about $1.50. So they have moved pretty much about exactly in line with their straddle. Let's keep rolling. Let's go out to. Let's see. We got Spotify. We got GM. We got a lot of names pop. Let's go out to a name we were just talking about. A name a lot of you clearly trade every day. Just given our top 10 most actives. It's Tesla. They're popping off tomorrow after the bell. When we ran this, you could tell it was towards the end of last week. Last we ran this number is 155.5. Obviously, they have sold off over $10 from there. They were pricing in $12.75. In the past, they've moved $12 exactly. So pricing in a little bit less juice in Tesla. Given this environment, is that warranted, or is maybe all the move already priced in? Maybe that's what they're banking on. Either way, less juice. Were you betting on less juice in Tesla? I was probably thinking maybe a little more, given all this madness we got popping off out there. Let's go out also to our friends formerly across the street, Boeing. They were at 170 and about a quarter when we ran this report. They were pricing in $9.05. In the past, they've moved $6.70. So more juice for Boeing. I think given all the headlines that have been coming out about them, almost all of them universally negative, kind of hard to argue against a little bit more juice out there. Ford, 24th after the bell. $12 even is where they were when we ran this report. They're at $12.82 right now, so they've regained quite a bit of steam out there. Nearly 70 cents today. Have to go back to some call overwriting in Ford again. They were pricing in $0.75. In the past, they moved 60 cents. So a little bit extra juice in Ford. Obviously, all these EV headlines not playing well for Ford as well. They've had to slash prices on things like their Mach-E and their Lightning and everything else. So kind of intriguing across the board how this is playing out. Let's go out to Meta, 24th after the bell as well. They were at $4.94 when we ran this report. They were pricing in, now this is interesting, $39.50, listeners, is what they were pricing in. It may sound like a lot, but in the past, they've moved almost $64. So if you buy these numbers, then you're talking an almost half price sale on earnings vol for Meta out there. You down with that? You think that's too cheap? Is that not cheap enough? You think Meta's going to pop and surprise people? If that's the case, maybe you want to take a sniff at some earnings vol around Meta time, because they have moved a lot more in the past than they are pricing in right now. Let's do one more. American Airlines, 25th before the bell. Nearly $14 is where they were trading. They're pricing in 92 cents. In the past, they moved about 52 cents. So fully 40 cents more juice. Doesn't sound like a lot, but when you're starting at 50 cents to begin with, that's a heck of a lot, nearly doubling what they've moved in the past. So expecting a little bit of juice out there on the American Airlines front. Again, there are dozens, if not hundreds more of these, listeners. You can check them out till your heart's content, theoptionsinsider.com. Click on the Options News and Articles tab to begin your journey to the dark side as we continue our journey into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the odd block.
All right, everybody, welcome to the Odd Block, the portion of the show where we get weird, we get wild, we get a little whimsical. Mr. Rock Lobster, it's been a while since you've joined me to talk some unusual activity. You know, you missed it on Friday. So do you recall how this portion of the show works, sir?
As long as I keep my mute button off, I have a shot at it. I have a reasonable shot at it.
You have a shot at it indeed. Let's see if we can find you another good old-fashioned money chucking. What do you think? Let's see if we can find some.
A little money chucking.
A little good old money chucking. All right, let's go out first to Warner Brothers Discovery, ticker symbol WBD. Talked about them before, maybe very recently. Trading $8.46, up about 6 cents today, so not even a dime worth of movement out there. On the year, you know the long, sordid tale that is Warner Brothers Discovery. Make a movie, pretty much pay for the whole thing, and then shelve it, never to be seen again. And they do that again and again. Make a bunch of other baffling decisions that have proceeded to just annihilate the stock. Almost 40%, really, on the year out there. So it's been a lot of bleeding out there in good old WBD. Fast forward to today. What did we see, Mr. Rock Lobster? I think the technical term for this is, holy crap, that's a lot of puts. In particular, we saw the expiring on the 31st of May, so end of month May, 7 puts going up for 11.5 cents, 83,950 times. Now, they did these on splits, obviously, to get that 11.5 cent print. That's how that works. They did 2 blocks of around 41,000 each, one for 11 cents, one for 12 cents. You know how that works, listeners. Pretty much crushing the bid. Now, Mr. Rock Lobster, you might look at that and say, oh, that's a pretty large line in the sand that someone is drawing in Warner Brothers Discovery. They want to buy some stock there. And you may be right. But since you missed us on Friday on Oddities, allow me to regale you with a little bit of fun we talked about on Oddities on Friday, listeners. If you're not on the pro side, you missed this, listeners. But we've talked about a pretty sizable collar that went up in Warner Brothers Discovery just on Friday. It was the May 8 half collar. So they bought the 8 puts for 55 and 56 cents. So pretty much for 55.5 cents, again on splits, pretty much 90,000 and 35,000 times. So over 120,000 of the 8 puts going up there against 120,000 of the 8 half calls for 45 cents. So they did this whole collar. They bought it for around a dime to 11 cents. So that's something we've seen a lot in this stock. Very tight collars. They have worked out in the past because, as we've said, the stock continues to fall out of bed. So these people aren't playing. They're collaring it very tightly and then selling calls very aggressively against it. So we saw that on Friday, Mr. Rock Lobster. And we said, oh, they're paying about 11 cents for this. And then lo and behold, what happens this morning? These 7 puts come up for size, hitting the bid almost the same size, not quite the same size, but pretty close to it, almost 90,000 times for 11 cents. So it sounds to me, Mr. Rock Lobster, like somebody's coming in after putting on this massive collar on Friday and saying, you know what? I didn't really want to pay 11 cents for this. I'm going to do it for nothing. And so they sold these puts. That's my take on these. A little bit of a late addition, a late leg to that collar, if you will. Are you down with that? You agree, or do you completely disagree?
I like the thesis. The only problem is with the collar is you still got the 1.2 million share short. Oh no, 12 million share short at 8.5. So they might have done it for. They put the collar on maybe for even money, but they still got the. They still have the slight short delta at 8.5, unless they did this with stock.
I'm sure they have stock against that. This is an against stock trade. I'm sure that they're sitting on.
You would think it would have to be. So they bought stock. But what's funny with Warner Brothers is it's like, how low can it go? Didn't Warner Brothers buy AOL in the 90s?
Time Warner.
I'm trying to remember.
Yeah.
I think they did.
Time Warner, kind of a different entity of them, but yeah.
Yes, I mean, so let's see what the current entity value is. And, who knows what's happened since then. Yes. So the current entity value for Warner Brothers, and I think they have Time and all the other stuff, right, in it. Warner Brothers Music Group, who knows, right? They've got CNN, Discovery. So okay, maybe they don't have all the assets. Who knows anymore, right? Because time is so many. But the whole entity now is worth $20 billion. And I'm pretty sure in the late 90s, they spent a lot more than that for AOL when they did that merger.
First off, guess the year and the date, if you want, when that merger went down, the Time Warner AOL deal, which, by the way, was valued at $350 billion.
I mean, I'm sure Goldman, whoever did with the banker, made good money on it.
Yeah.
I'm going to guess it was like 97.
No, later. January 10th of 2000.
That's almost like top tick.
That is. That's what I'm saying. This was kind of the top of the crest right there.
Wow.
They missed it by
impressive.
They missed it by a couple of months. Yeah.
Yeah, because I remember when that trade went up, I was talking to guys in the crowd. I'm like, that is the best funny money trade ever. It's like, because, AOL, like the value was insane. I didn't even think it was making any money. It was worth $100 billion or something crazy like that. It's almost like taking totally worthless funny money and exchanging it for, the assets of, because I remember I could have sworn like Time Warner at the time, they made like earnings wise, 10, 20x, whatever it was. But everybody's like, oh, AOL will make lots of money soon. I just remember it being a brilliant, the guy actually got out of his, Steve Case got out of his AOL shares for Time Warner shares. But anyway, and then I think ever since then, that whole conglomerate just slowly become what it is. It's a $20 billion company. And even Warner, even Discovery Channel before they did this merger was worth more. Because then AT&T bought it and managed to screw it up too. It's like, it's one of these things where I think, the bankers get this idea and then they get some executive all hot and bothered about it and they go, oh, let's do a deal. And it just creates like zero value.
Hey, it worked for Steve Case. He traded in those CDs you got in the supermarket for real shares. Hopefully he bought puts. Hopefully he pulled a Mark Cuban and bought puts on the way down. By the way, if you're wondering what happened to all that market value, as soon as 2002, Mr. Rock Lobster, AOL Time Warner, so the new combined entity, reported a quarterly loss in just 2002 of $54 billion. The largest loss ever for a U.S. company in a quarter. So that's where lion's share of that value went. 2003, they removed the AOL branding, so it didn't last very long. And then 2009, they spun it off completely. Man, a little bit of a fun and or disturbing history lesson here for the market. But yeah, you're right. That was January 2000. That's pretty close to the top of the bubble there, listeners out there right now. So it seems like somebody collaring against Warner Brothers, making another move to the dark side, but maybe not that far because they're willing to sell the 7 puts against it. Let's go out to another name we've talked about recently on the network. This is Coupang, ticker symbol CPNG, trading $22.38, up about 38 cents today. This is a Korean e-commerce company based in Seoul, South Korea, and Seattle. On the year, they've had a good year, up about $6.50 or 41%. So a nice little year for them. It's been mostly straight up. And we have talked about them previously, which is back on the February 12th show. We talked about somebody coming in and liking themselves some upside to the tune of buying the 16 calls for $1.07, 4,375 times when the stock was $15.04. Yes, $15.04, so fully $7 and change in the rearview mirror now, listeners. Spoiler, they did a total of 13,000 on the day. Spoiler alert, those are looking pretty good. Stock moves 7 handles in your favor. You buy a $1 out of the money call. You're going to be looking pretty good. That's how the math works. Looks like they rolled those on February 27th to the 19 strike. So they rolled the 16s to the 19s. They sold the 16s for $2.05, so they made about exactly $1 on those calls. They put that back to work, spending 85 cents on the 19 calls for 8,500 times, lifting the offer there. Those are already looking pretty good as well. The stock was $16.95 at the time, so they've been on the right side of history both times with this trade. And then against that, also, listeners, they pulled a little bit of a Mark Cuban, doing a little bit of hedging action. They bought the 16-14 half put spread against it as well. Looks like they did it for about 33 cents, 3,000 times. So all sorts of funk going on this one. Fast forward to today, listeners. What do we see? Saw somebody coming back in, and it looks like maybe wanting to keep the parlay alive again, buying 7,000 of the 22 half calls. Again, pretty much at the money calls right now. Paying $1.36 for these boys. These are expiring in June. Worth noting there are earnings on May 7th out there. So a lot to unpack. Mr. Rock Lobster, somebody has a pretty good track record of picking the upside here in Coupang. Maybe the same person, maybe not. We don't know, obviously. Coming back to play to the upside again. What are your thoughts swinging for the upside again in Coupang?
Well, you got to swing for the upside in something. So it might as well be, Korean e-commerce. I mean, Korea is kind of, except for every once in a while when they do everybody freaks out about Kim Jong-il or whatever. It's still, it is a country that does have, I think for the most part, it's well run. They have kind of like interesting politics, like because big kind of, mega family politics and all this. So sometimes they go to jail, they get out of jail. It's all kinds of drama going on over there. But I would say I don't think these are an unreasonable purchase from almost any angle, to be quite honest, because you've got a little bit of carry time. The price is reasonable. Not a bad purchase, I think.
It's hard to argue with the track record. They've been on the right side of history for the last few months. Let's see if they can keep the party going. You know, a guy who's never on the right side of the history, though, it is Uncle Mike, as we keep on rolling into the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the strategy block.
All right, everybody, we got a little bit of time left in the show. Just enough time for Uncle Mike to tell us all 3-step guide to how you too can get the Michael Knight frizzy perm look from Knight Rider. Have at it, Uncle Mike. Go. The floor is yours.
I'd have to yield to my wife or my kids on how to get curls because that's something that I've honestly never had. So I want to talk today about a passive hedge becoming an active hedge in trading. So we had talked about collaring a little bit in the odd block. And let's say that you're doing a collar and you start off as just a very passive collar. You want to be boring. You want to just have a little bit of exposure to the stock. So you put on a 1 year or a 6 month or a longer term collar. Traditional collar, XYZ stock can be at 100. Maybe you have the 95, 105 collar on, meaning you sell the 105 call and buy the 95 put, and it's an even money trade, let's say. But all of a sudden, the stock actually, and you're not expecting a ton from the stock. You think it's going to be a good, boring trade. You just want it there just in case. Let's say the stock goes down to 80. That's where the opportunity comes into play. If that's the case, then all of a sudden, you can kind of have a little bit of a change of heart in terms of going from passive to active. Step one, the 105 call will likely be worth significantly less money. Not zero, but significantly less. And so what you can do with it is you can buy to close the 105 call. And by doing that, you now have unlimited upside. So here's the other way with which this can shift, in that you started this out as a boring stock, but it became not so boring. So maybe you can shift your portfolio. Now, keep in mind, your allocations need to be balanced. You need to continue to reallocate of what section of your portfolio you want to be more aggressive, what section you want to be more boring. But this stock just became a whole lot less boring. So some things you can do with it would be, number one, if you want to keep riding this a little bit, you can maybe start selling some puts. So let's say the stock is at 80, you have the 95 put in place, so you're protected, but you're not going to gain anything until the stock goes above the 95 level. well, maybe you can start selling the 75 puts. And if it's a stock that say that you liked it 100, you love it at 75, if it's that type of thing, then maybe you can shift it a little bit. And by doing that, if the stock just kind of sits there and does nothing, it's a benefit to you. If the stock flies back, well, you're back to break even. But the problem is that you didn't really gain anything. But if you're selling those puts, the near-term puts, whether they're 1 week, 1 month, whatever the case may be, you have a chance to at least collect some income. Now, of course, the disadvantage to doing something like this is that you no longer have that solid downside protection. But what this does do is this is a way with which you can shift from a passive hedge to an active hedge if that's what you're looking to do. Now, if you know that I don't want to shift my assets around, I want to keep this boring, do nothing. That would be my recommendation. But this could be an opportunity to do a few things with this stock and maybe not feel so much pain if it were to stay the same. And that is my strategy for today.
As we go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, let's get out there, see what's on everybody's mind, what they're keeping an eye on for the rest of the week, what you folks have on your brains as well. Let's start really quickly on your thoughts from our question of the week from last week. What has really been the biggest driver of this rally in the market? You folks chose the AI revolution, 48.8%, 39.5% for the Fed. So the Fed taking back seat to the AI revolution. Interesting. And then other going for 11.6% out there. Fast forward to our question of the week this week. A very timely one, just went live right before the show. This is the hot thing right now. Everyone's talking about it. NYSE polling people about it. So we thought we would do the same out there. Very simple question. Do you think stocks should trade 24 hours a day? Yes or no? Let's go around the horn. Mr. Rock Lobster, we'll start with you. Do you want the hotly anticipated, very contentious 24/7 or perhaps 24/5 trading day in stocks and therefore options? Do you want that? The B, which way do you think our audience is going? And C, what are you keeping an eye on for the rest of the week?
I mean, 24 hours a day just means there's no days.
It's an endless blur of pain. Yes, sir.
Yeah. You know what? To be quite honest, I think everybody is going to say, well, I think a new generation, like, oh, we want 24 hours a day, but I think a day to let things settle is probably better because I don't think the liquidity will be that great personally. So I think, just having an open and close time is fine. But I think the majority of listeners will want 24 hours, 24/7.
And what are you keeping an eye on for the rest of the week?
I think Microsoft, just tech earnings, were like busting through 5,000 again. I think some of this, now they're going to give the Israelis a bunch of money and Ukraine a bunch of money. There's some, I feel like the kind of the war premium is gone, especially with the low velocity of the sell-off. So I think good earnings will get us back to like 5,100 SPX again. And I think that's the bigger thing. We have some inflation data, but I think at this point, nobody expects the inflation data to be that good anymore. The reality is kind of set in on that one. So I don't think we'll have the go-go we did in the first quarter, but just corporate earnings might be enough to keep things going. So I think that's definitely like, look for Microsoft, Google, and some of the bigger names this week. There you go.
And Mr. Uncle Mike, what are your thoughts? I think first off, do you want 24/7 or 24/5 trading? B, do you think our audience wants it? And C, what are you keeping an eye on for the rest of the week?
I prefer we don't have it. I like having a nice little rest. And in reality, you can kind of get it anyway if you're trading the markets themselves. And if we don't have a ton of liquidity on the future side of things, meaning if it's 2 a.m, you're not going to get a huge volume rush on the S&P Mini. I really wouldn't expect it to happen on Qualcomm or Chubb or Microsoft or whatever. So I'm against it. You need to rest at some point. So with what I'm watching for this week, earnings and 5,000.
Let the man rest, listeners. That's pretty much what our audience is choosing right now. 72.7% of you in the early going saying you do not want 24/7 trading out there. Again, if you want a sample of what this is like, just go to some of the futures markets, or indeed coming up, we're talking about crypto in a little bit. Go to the crypto markets if you want a sense for what that never-ending marketplace is like, how illiquid things can get in the after hours. Do you want, I mean, we always talk about after hours for earnings for options, but that's a different thing. That's kind of just keeping the options open when the stock is still kind of open, even if it is illiquid. But this is kind of just nonstop. Seems like our audience right now not feeling it, listeners. But if you're feeling a little bit more content in your life, stay tuned. We'll be back in a little bit. Maybe we'll talk about this 24/7 push in the world of stocks, how it's already playing out in the world of crypto. We got some great guests joining us to help us do that. So come back in a little bit to check all that out. And let's go around the horn and see what everyone else has cooking that may interest you. Let's start with the Rock Lobster, sir. If folks want to debate 24/7 trading with you, where should they go? What should they do?
Yeah, go to optionpit.com. And don't forget, we're having our big event this year in Chicago in July. So go into our website and sign up if you want to meet me and you, actually, even in TOSAW live. You want to meet them all of us live in one place in Chicago. We'll be doing the show live there. And of course, we all get to eat on mark. Well, it's a great, great event. Plus, usually our students pay for their trip because we have so many good trade ideas and they learn so much in that trip. So 888-TRADE-01, come to optionpit.com.
I can confirm, listeners, not on me, the steak on the meatball is the tastiest steak you will ever have in your life because the meatball bought it for you. And Mr. Uncle Mike, same question for you, sir. What is lighting up your tape? What should folks go to learn more Uncle Mike wit and or wisdom?
Follow me on Twitter at Mike TOSAW, TOSAW, and check out my website, stcharleswealth.com. Make an appointment to have a conversation with me. Would love to talk to any of our listeners on hedged portfolios, covered calls, options, or even Michael Knight.
You too can talk Michael Knight. Maybe make a bid for his kit from the 80s and see if he'll sell it to you over there. stcharleswealth.com is the place to go. We got to go back here in a little bit for more content today. Got the crypto rundown coming up with the folks from Hash Rate Futures. They got some cool stuff cooking. We'll see what all the fun is about. What's lighting it up in the world of crypto now that everyone's caught up in all this halving madness. Back again throughout the rest of the week with our usual array of content until we're back again on Thursday. Another episode of the Option Block. Stay safe out there, everybody.
Most options trading platforms are commission-free, and there are some that don't charge per-contract fees. Public.com goes a step further. When you trade options on Public, there are no commissions, no per-contract fees, and you get a rebate of up to 18 cents per contract traded. That means it costs less than $0 per transaction. In other words, instead of paying to place options trades, you literally earn money, and that money can add up fast. If you trade 1,000 option contracts on Public, you'll earn up to $180 in rebates. 10,000 contracts? Up to almost $1,200. It's pretty obvious why NerdWallet recently gave options trading on Public 5 out of 5 stars. Because Public really stands out for the cost of its options trades. Their words, not ours. If you want to start paying less than $0 to trade options, check out Public.com and get a rebate of up to 18 cents per contract traded. Paid for by Public Investing. Options not suitable for all investors and carry significant risk. Full disclosures in podcast description. U.S. members only. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.